Hi, I'm Justin Miller with the Chong Group. In this video, give you the March update on the residential housing market in Las Vegas, Nevada. I'd like to, instead of, however, giving you a bunch of numbers, I'd like to give you some more general information about the market here in Las Vegas. So what I want to talk about is headwinds and tailwinds in the market. If you think of an airplane, you're flying across country, you know sometimes a pilot will say the flight's going to take longer than normal because there are headwinds. These are winds that the plane is trying to fly through that slows things down. And markets suffer from headwinds as well. Tailwinds are winds that push the plane along and actually cause you to have greater speed over the ground. And so markets similarly have tailwinds, forces that propel them forward and make them more dynamic and perhaps faster in motion than they might have absent these tailwinds behind them. And so I want to talk about some of these today. Over the past several months, and by several months I really mean from about October through February, we've had a couple significant headwinds impacting the residential real estate market, not just here in Las Vegas, but nationally. One of the primary headwinds that we've had has been increased interest rates. If we look back to this time last year, the March timeframe last year, residential mortgage interest rates on a 30-year fixed rate loan were averaging something in the 4.25% to 4.5% range. Interest rates actually increased all the way to about 5.25% in October. And while that's not necessarily high on an historical basis, that was high relative to what the housing market has experienced for mortgage rates over the past few years. And so that significantly slowed people's home buying decisions. And there's a number of reasons why that may be so. People who had interest rates that were lower on existing homes may have felt, why trade to a different house where they're going to have to pay higher mortgage rates? Some buyers may have been thinking, well, this is negatively impacting my ability to afford housing because I now have to pay more on a monthly basis for any particular level of expense on a home. And a couple of other issues like that, including just simply psychological. Well, why do I want to pay more now for a loan than what I had to pay for that same loan a couple of months ago? Well, since the beginning of the year, interest rates have come down significantly from that 5.125%, 5.25%, and are now back in that same range that they were last year of 4.375% to 4.5%. So the interest rate headwind has been pretty much completely eliminated. I don't know that interest rates are so low that they're a tailwind, that they propel us forward, but they're certainly no longer harming activity in the marketplace. Another headwind that had been impacting us since December and perhaps since November in the lead up to this event was the partial government shutdown, and then lack of knowledge as to whether or not we were going to have another partial government shutdown. In Las Vegas, that government shutdown was very significant to us. It was across much of the country, but here perhaps even more so. One of the governmental departments that was impacted by the shutdown was Department of Homeland Security, which includes the Transportation Security Administration. And the McCarran Airport here in Las Vegas, it's the 8th largest airport in the country, proportionally to the size of the city. That makes us more dependent on airport employment. So we have a greater proportion of TSA agents here than other cities do. Same thing with air traffic controllers and others who are involved in the airport operations themselves, as well as all those things attached to it. And so that's just one example, one area of the government that was shut down. If you didn't know you were going to get paid or where your paycheck was going to come from or when it may arrive, you were probably very hesitant about making investments into the future and possibly having trouble even making payments to live in the present. And so you were pulling yourselves out of the real estate market. So that tailwind has now, or that headwind rather, has now been eliminated. We have certainty. The government has been reopened and it has been refunded for the remainder of the fiscal year. And so we don't have this headwind negatively impacting the market any longer. What about tailwinds? What about things propelling us forward? There's actually some really neat, interesting tailwinds that impact Las Vegas on an ongoing basis. Las Vegas is a growing economy, growing pretty significantly and pretty rapidly. I mentioned in the last market update, we get 50 to 60,000 new residents moving into the Las Vegas Valley every month. Those people have to have housing. The people who are arriving could move into apartments, they could move into houses and rent them, they could move into houses and buy them, they could have built for them new housing. But there's only so many opportunities. New home construction is a little bit slower right now than it had been. New home construction does not in any way accommodate all of those new people who are moving here. We've had an uptick in apartment construction, and so that's helping to alleviate some of the housing shortage, but we actually have a housing shortage developing here in the Las Vegas Valley. And so that's a tailwind that pushes the market forward, that increases the number of transactions, it increases the prices that we can see from those transactions. And that's a long-term structural issue until we manage to get a lot of new construction taking place at those segments of the market where new construction is most needed. We have realistically a very tight market in those below average price point units. And so, you know, at the 700,000, at the $1 million price points, the market has not picked up speed yet. It had slowed. In the $250,000 price points and lesser, that part of the market has remained very tight, and we see that actually accelerating right now. In February, we saw some pretty substantial acceleration in that portion of the marketplace. Are there other tailwinds beyond this sort of natural in-migration to the Las Vegas Valley? Yes, there are. There is significant capital investment taking place right now in Las Vegas, not in home construction, but rather in other things. We see it with significant transportation improvements that are taking place. If you're driving around the southwest part of the valley, as well as some other areas, you see a lot of roads torn up for water infrastructure work and also for road widening. If you're driving along the 15, you know there are new interchanges being built to accommodate growth. If you're anywhere near downtown, you know that there's been a very large, significant Project Neon, to expand and rationalize the I-15-95 interchange, and that's coming to a conclusion. That's almost done. And in the southeast part of the valley, we've had the opening of I-11, a small section of that, but I-11 will ultimately connect Phoenix to Las Vegas, and in fact, at some point in time in the future, will connect the U.S. from the Mexican border to the Canadian border, running through Las Vegas. So that's a very significant upgrade. Beyond that type of infrastructure upgrade, we've also had the opening of the so-called third straw water supply from Lake Mead, which provides the water resources for the Las Vegas Valley. We also are seeing the building of the Las Vegas Stadium for the Raiders. That's a $1.8 billion infrastructure development. We've got the new Las Vegas ballpark being built in downtown Summerlin, which is $150 million. We've got a large sport arena sphere being built on the east side of the strip by the Sands Corporation and AEG. We have another arena being built by Caesar. We have a $4 billion casino being developed by the Genting Group, Resort World, across the street from the Wynn, across the strip from the Wynn. We have development taking place at the Drew, formerly known as Fontainebleau. I don't know that that comes to fruition or not. That's a very troubled building and site. But there are people who believe that that will actually come to fruition, and that's going to amount to probably about $2 billion in infrastructure development. And so we've got significant sums of money, and then we've got all of the work being done up at Apex with opening of new light manufacturing and distribution up there in the Apex Business Park of North Las Vegas. So we've got a lot of investment taking place here. We've got a lot of people moving here. And these are tailwinds. These accelerate the market. So where are we in the market? February was stronger than it was in January. February home sales in the Las Vegas Valley in 2019 were actually almost as strong as they were in the February 2018 timeframe. So we seem to be getting back on pace from the slowdown that we'd had from October through January. As well, we have a seasonal tailwind that impacts us pretty much every year at this time, and that is the movement into spring. And so, for example, last year in 2018, there was an approximately 50% increase in sales that took place in March relative to February. So we're moving into spring. Again, here, the rain seems to have perhaps stopped. The chill has been removed from the air, and people will start perhaps coming to avoid more of the polar vortex in other parts of the country. So we'll have our spring, can't really call it a thaw here, we'll have our spring growing season, and that acts as a seasonal tailwind at this time of year. In the January video, I mentioned we've not reattained the high price point that we'd achieved in 2006, approximately $315,000. We actually have been hovering in the $295,000 to $300,000 price range for the past 4 months. I expect this year we're actually going to probably hit that 315 point again. Now, there are national headwinds that could impact us. It's possible the U.S. economy this year goes into recession. If it does, that will slow the housing market. That will act as a headwind. We don't have the same kinds of leverage issues that we had in 2006. We don't have the same kinds of subprime mortgage issues that we had in 2006. And we don't have the same kinds of mortgage interest resets that we have that we experienced in 2006, because the variable rate part of the mortgage market is much smaller here in Las Vegas than it had been in the 2006 timeframe. So if there's a recession, does that mean we're going to have a housing price collapse? No, absolutely not. Does it mean things will grow more slowly than they might otherwise? Yes, I would think so. If there's no national recession, we'll probably exceed that 2006 price point this year. If there is a national recession, we'll probably get very close to hitting that, reattaining that. I will comment, as I did in January, that Las Vegas is one of the very few metro areas to not yet have reattained the peak price that had been achieved in the 2006 timeframe. And so that means that while some people wring their hands about lack of affordability here in Las Vegas or in various other cities, Las Vegas is actually a more affordable housing market than any other big city in the US right now. So we've got room to grow. We've got tailwinds pushing us forward that suggest the market's going to grow, that suggest pricing will actually be increasing. So if you're a buyer, is it a good time to buy? Absolutely. It's a good time to buy. Interest rates have come down. You can get into the market and carry a larger mortgage for the same payments right now than you would have been able to a couple months ago, or will be able to in the future if or when interest rates go higher. There is availability. There's more inventory in the market now than there had been because new inventory was coming in while home sales had slowed. And so it's still actually considered a tight market. We've got about 4.5 months of supply, but anything below about 6 is still considered a tight market. But there's about twice as much inventory as there was to choose from at this time last year. So you've got availability, you've got options. It's a great time to get in the market if you're a buyer. What about as a seller? Is it a good time to be in the market? There's excess inventory. Well, there's buyers out there. And if you want to sell, having buyers around is always a great thing. I will caution you, pricing strategy becomes really critical in this kind of market, in sort of a transitional market where we're closer to balance. A lot of people found themselves burned in the summer and fall of 2018 by having priced where they thought the market was going to, and the market didn't get there. And people had to start cutting their prices, not because prices were actually falling, but because they had simply priced it too high. They priced in anticipation of where prices may be. That's not a good strategy in this type of market. You need to have an agent who understands pricing, who understands market forces, and who understands negotiation to be able to set you up to actually sell your property, to get you out of it with what you want, what you need, and allow you to move on to the next opportunity. At the Chong Miller Group, we are real estate professionals. We would love to represent you, whether you're buyers or sellers. We specialize in the residential housing market in Las Vegas. We've got experience dealing with this kinds of market phenomena. We have experience, and in fact, I teach negotiation. We have experience dealing with pricing strategies and looking at how markets develop. And we can deploy those knowledge bases, those skills to your benefit, whether you're a buyer or a seller. So please give us a call. We look forward to talking with you, and I'll see you again in a couple weeks.